The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Occidental Petroleum Corporation with the ticker symbol OXY. This was a viewer's request, and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only. It does not constitute any financial advice. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So here we have the daily chart for OXY, and to the untrained eye, you would think that this is pretty random. Prices just going up and down erratically without any basis for that, but to me it is pretty controlled, and I'll go over the reasons why. Or if you want to say manipulated, you could say that too, because the price is still following the technical analysis rules. So here is the daily chart for OXY, and we can see the price action since March of last year. So this is a little more than 1 year's worth of price action, and you can see the price action is just going up and down through this 21 bar EMA, and it's range bound. So we can put a macro range on this price structure. Lows look to be right around the 54.93 level, which is the support, and the highs are right around the 75.80 level, which is the resistance. So you can see how well the prices are being contained inside of this range pattern, and you can see the median line or the midline is acting as a support and resistance, and it gets choppy near that area too. So that also has some significance on this chart. So basically, prices are in a range bound pattern. However, that's the macro pattern. We still have trends within this range. You can see there was this downtrend right about here, and prices broke it, made a few legs down to new low, reversed, and then it went inside of a larger range. You can connect the swings like this. This is a larger range, or excuse me, a larger trend pattern that prices are respecting, and you see that prices were going down to the lows of the range, came up a tad short, and prices have rocketed higher above the EMA. So this tells me something is different. Maybe we don't continue lower from here, and I'll go over the reasons why. So basically, prices were attempting to reach this measuring target right here. This was the first leg down, and this was the second leg down. So the market was trying to attempt to reach this 56 level, and it looks like it's failing because we came up short of the range, and it couldn't reach the measuring target, and we rallied higher right through the EMA with a lot of force, and right now we haven't seen a reversal yet. So this looks pretty good for the bulls. So this is making me think that maybe we go back up to the highs of the range. So a range pattern, we go from the lows to the highs, and the highs to the lows. It just goes back and forth. However, that's not guaranteed all the time. If you look at the structure, it'll tell you if it wants to do that or not. Right now, it does look like it could be in play, so I would be expecting the prices to continue higher towards the upside of the range at the 75.82 level. With the caveat though, I want to see the sellers fail to drop the price down. So what do I mean by that? You can see there was this uptrend channel in play right here. Looks like we had an overshoot, but maybe it could be dragged up higher. It wasn't really confirmed off the top. Maybe it's like this. So if we see two legs down, that means the sellers tried to drop the market down twice. This would be the first attempt, and if this is the swing high right here, I don't know, because it's not, we didn't see any dropping yet. But let's just say it's here, because we can still continue a little bit higher and the arrow would be moved up. But either way, let's just say it's right here. I want to see the sellers fail to reach this low point right here that it created in this downtrend 2 times. So this was the first time it tried to reach it. Prices went up. This will be the second time. So if the second time fails, then that's a trap for the shorts. So I'd be expecting that to fail. We don't know what's going to happen, but we expect it to fail. And once it does fail, that's when we could see the move higher. If prices just break below the 62.19 level, then I'll be looking the buyers to fail. So if we go back up again, if we do something like this, then I'd be expecting a move down, because the buyers failed to drive up the price 2 times. So the seller's going to come in and see the signs of weakness for the bulls, and just take their money. So it works the opposite way too. If the sellers fail to drive down the price twice, past this level right here, then we could see a move up higher. So depends on what the market wants to do at the end of the day. We don't know what's going to happen, but once we see the move that the other trader does, then we can be almost pretty much 100% confident that we can do the opposite. So that's how I'm looking at OXY. Basically, I'll be looking for it to fail. So this right here, I'm not expecting to occur because of failing to reach this measurable target. I mean, we can still reach it, but since we had a huge pump up, there's a good chance we probably won't. Since we came near the support side of the channel, we should be reaching the opposite side. So basically, after the macro structures, the range lows, the measure move not being met, there's a good chance we probably continue to pump up higher. But I want to see the sellers fail to reach this low 2 times. So we just saw the first time, expecting another drop because the market moves in 2s. So if the sellers try to drop down the market twice, we can probably see another move up from the bulls. So that's how I'm looking at it, because there's 1 move up from the bulls, 2 moves down for the bears, but now the bulls can still do 1 move up higher because the bears already did 2 moves. So that's how I'm looking at it. We'll have to wait and see, but as of right now, this is what it looks like it's trying to do. So that's all I have for OXY. And sometimes if the range lows or highs are strong, really strong, then we don't get a new low of the channel. Normally after a break of a channel, you get a new low, just like what happened right here. This was a previous downtrend channel. Prices broke it and then surpassed this low point in the form of 2 legs. So that was 2 legs down right here. But the channel got wider. This one still was being respected. Let me go and draw that out. So you can see that prices had the starting point right here, tested it once here, twice, 3 times, and then obviously it broke because prices cannot reach the lower side of the channel, which shows signs of strength for the bulls. So maybe this channel does even come into play, meaning like I said before, if we see those failures, then it doesn't even matter. This was probably the channel that traders were looking at, and it does make sense. But either way, we want to see the 2 attempts down that fail for prices to continue higher. So that's what I'm looking at for OXY. So I'll be expecting the sellers to fail to drop down the market for the bulls to rally higher. Again, that's the expectation. If we drop low pretty hard, then it might be setting up as a long trap. So if we do something like this, then that might be a potential long trap. But if we come back and maybe stop right here, then we could probably see the move higher. So that's everything I have on the daily chart. Now let's take a look at the weekly chart, and we're going to be looking at more price action, more in the past. So this price chart goes back quite a ways. It goes all the way back to about, looks like 1968. Now I'll go over this in my course, that the price action is the same since that time period. If you go and back test this, or put some channels and ranges, you can see how well things were working in the past. It doesn't matter. This is from the 80s. You can see how well the price action was respecting the range. We have trends. Basically all the technical analysis tools that I use was still being used back then. So I mean, and this is just the chart that shows the price of 68. What if it goes down to the 50s or the 40s or the 30s? It probably does the same thing. I mean, I'm pretty sure it does. This one does right here. And you can see how well this horizontal line or this level was being respected at this $8 level as support in the past. So you can see that for some reason buyers were not letting the price get below it, and stay below it for a long time. You can see it was acting as a strong support throughout the decades, this $8 level. Now if we go back to a more recent time, what happened right here in 2020 and 2021, prices reached that $8 level or close to it, and it was the bottom. It was the bottom for this new bull market, just like it was the bottom over here for this bull market for this decade. This could be the bottom for this bull market for the next couple of years or even the next decade. So we'll have to wait and see. But as right now, I mean, if it happened in the past, it can happen again. So that's what it looks like it's signaling. Okay, now we can come more towards the near term, the past couple of years. You can see that what price is doing is a V bottom pattern. It dropped down really fast from 2018 all the way down to 2020 like this, and now bulls are sending the price up just as fast as it went down. So that's a V bottom reversal. Since the market is symmetrical, you're going to see a lot of symmetry in the market. That's how ranges are formed, that's how trends are formed. That tells me that we're probably still going to continue higher. at least probably to the swing high right here. Again, everything's just an attempt, but that's what it looks like they're attempting to do. You know, that's everything's just an attempt. It's not guaranteed, but the bulls are attempting to reach this 86 level, and it makes sense because we did get back above this previous support. This was a nice support in the past. Support here, support here, support here. Prices broke through it. Now we came back again inside that level, and we're finding a lot of support. Sellers are about to give up because we just saw two large attempts by them to break it. So this is the first large attempt. This is the second large attempt. It was met, and prices are, you know, still defending this level. So it tells me you're probably going to see higher prices. And also this uptrend channel is still in play. You can see if I connect the swings, we got 3 on the bottom, 2 on the top. And prices are trying to reach this opposite side, so they're going to try 2 times, which we already saw. So we could probably just see a rally from here. This looks pretty good. I was expecting prices to drop a little bit. This weekly candle is looking kind of bullish, but maybe we don't see that drop. That would be even more bullish. So I mean, maybe this gap gets filled and then we probably see higher prices. But again, we could probably just see higher prices from here. But as of right now, this looks pretty good, as long as the bulls rally higher after those sellers. It just depends on the sellers. If the sellers are strong, then we might not get that chance to see that trap. If they're weak, then that trap will set up on the daily chart. And then I wanted to go over the last thing, which is we zoom out more. Since I say this is still a bull market or a bull trend, we could probably see another huge leg up. This is one entire leg up, and this is the biggest correction we've seen in this entire up move. So all this is just one move up, and then this is the bottom of that correction so far. But I'm pretty sure there's a good chance it's going to be, and if it is, then the measurement target's at the 123. So this bull market could surpass the previous one and reach the 123 level. So that will not be met until at least probably late 2024, early 2025. It's going to be at least a few years, because this uptrend took about a few years. Another one the same size would be at the same time period. So it's probably going to be at least a few years to reach this measurable target. But either way, I think this bull trend is still intact. I think we're going to probably see higher prices, and that's all I have for Oxy. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel. Since you might be surprised what you could learn, leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.